All right, so today we're going to dive into a real head scratcher from the stock market. One of those stories that just doesn't seem to make any sense. We're talking about a company called BitMine Immersion Technologies, that's ticker BMNR, and they announced something that, honestly, you'd think would have absolutely crushed their stock. But it didn't, not even close. So let's get into it.
So picture this. A company comes out and says they're planning to increase their total number of shares by 100 times. 100-fold. I mean, your first thought, my first thought, everyone's first thought is massive dilution, right? The stock should plummet. But with BMNR, the exact opposite happened. The stock actually surged. So what on earth is going on? That's the big mystery we're unpacking today.
Okay, so this whole thing kicks off with the proposal that, on the surface, looks like an absolute disaster for anyone holding the stock. You know, it's the kind of announcement that usually has investors hitting the sell button as fast as they can. And here it is. Get ready for this number. The company proposed to jack up the number of shares it's allowed to issue from 500 million all the way up to 50 billion. Yeah, with a B. That's that 100x increase we were talking about. And of course, the first reaction from the market was exactly what you'd expect, panic about dilution. But that's not where this story ends, not by a long shot.
So how in the world do you explain that crazy market reaction? Well, it all comes down to reading the fine print. You know, looking past that shocking headline number. Because the details tell a completely different story.
Okay, so here's the absolute key to understanding this whole thing. The proposal was not to suddenly dump 50 billion new shares onto the market tomorrow. No way. It was to increase the company's authorized shares. Think of it like a bank account. Authorized shares are the total amount of money the company could ever spend. Outstanding shares are what they've actually spent and is out there right now. See the difference? This wasn't about dilution today, it was about giving themselves options for the future.
So you might be asking, why even do this? Well, management actually had a pretty clear game plan. They said they wanted the flexibility for future stock splits if the price runs up. They wanted to be able to raise money fast if another crypto bull market kicks off. And they wanted to be able to make big strategic plays without having to go back to shareholders for a vote every single time. Basically, they were asking for a much bigger, more powerful toolbox to play with.
Now, even with that explanation from management, you'd still think the market might freak out, right? I mean, it's still a huge number. But it didn't. Instead, it seems like the big money investors, the so-called smart money, read something completely different between the lines. And what they decided to do was, well, it was a total surprise.
Yeah, instead of collapsing, the stock price shot up by about 15%. And look, this wasn't some tiny little dead cat bounce. This was a strong, confident move to the upside. And it happened right after news that should have torpedoed the stock. Clearly, something else was going on under the surface.
And it wasn't just the price action. Check out the volume. Trading activity just exploded, going to 5 times or even more of its normal daily average. Now, in the trading world, when you see a price jump like that backed up by a huge spike in volume, that's a massive signal. It tells you that the big players, the institutions, are stepping in and making a very big, very decisive bet.
There's a term for this in the market. It's called absorption. You see, instead of existing shareholders panicking and selling off their shares, that's called distribution, we saw the complete opposite. Every single share that a nervous seller dumped was immediately snapped up, or absorbed, by huge buyers who clearly saw this as a golden opportunity. The smart money wasn't heading for the exits, they were rushing in through the front door.
And this brings us to the absolute heart of the matter. This is where the whole story flips on its head. The market completely reframed the entire proposal. They took a story that was about fear and dilution and turned it into a story about power and leverage. And it's all because of BMNR's connection to crypto.
You can really see it as a tale of two different stories. The old narrative, the one that caused the initial panic, was all about fear, right? Massive dilution, huge risk for shareholders, maybe the company's in trouble. But the new thesis, the one that won the day, that's all about opportunity. Suddenly, that huge share authorization isn't a threat, it's a weapon, it's future leverage. The company is now being seen as a way to bet on Ethereum, and its most valuable asset isn't its current business, it's its optionality, the ability to make big moves in the future.
I mean, this quote right here just nails it. The market is starting to see BMNR as an Ethereum-linked equity vehicle. Now, what does that mean? Well, think about a company like MicroStrategy. They're technically a software company, but because they hold so much Bitcoin on their balance sheet, the stock basically trades as a proxy for Bitcoin. People are now looking at BMNR and thinking the exact same thing, only for Ethereum. So here's the bottom line. Under this new way of looking at things, the ability to issue a ton of shares isn't a bug, it's a feature. It's a strategic tool that lets the company gear up its balance sheet and go all in if and when the next big crypto bull run happens. The fear of dilution just got totally replaced by the excitement for future leverage.
Okay, so the story has completely flipped. The narrative has changed. But what happens now? What are the key things that traders and investors are watching to see if this new, bullish story has legs? All right, for anyone watching the chart, these are the key levels to burn into your brain. That $30 zone, that's now the critical support level. As long as the stock stays above that, the bulls are in control. But if it breaks down below, say 27.50, that's a major warning sign. On the flip side, if it can punch through that resistance around 33.50, that could be the rocket fuel for a move up toward the high 30s.
And hey, you're going to want to keep an eye on the calendar too. The deadline for the shareholder vote on this whole thing is January 14th, and the company's annual meeting is the very next day, on the 15th. You can bet there's going to be a ton of volatility around those dates as the market finally gets the official word.
So really, it all boils down to two possible paths from here. The bull case is pretty simple. Ethereum has to stay strong, and investors have to keep believing in this new leverage story. If that happens and we get a technical break above 33 bucks, things could look really good. The bear case? That's when the old fears about dilution come roaring back, probably because ETH takes a nosedive or the stock loses that critical $30 support level.
So what's the big takeaway from all of this? It's that BMNR is not trading on old-school fundamentals anymore. Not at all. It's basically become a high-beta bet on the future of crypto, specifically Ethereum. That just means it's going to be extra volatile. The market isn't pricing the company as it is today. It's pricing the possibility of what it could do in the future. And right now, that optionality is everything.
And you know, this whole situation leaves us with a much, much bigger question. Is this BitMine story just a one-off, weird situation, or is it a blueprint for something new? Are we actually watching corporate balance sheets transform into just another way for companies to get leverage to bet on crypto cycles? It's a pretty wild thought, but it might be exactly what's happening in this little corner of the market right now.